global markets in turmoil, Middle East conflict escalates. Tensions in the Middle East have escalated sharply, sending shockwaves through global financial markets. Oil is surging, stocks are sliding, and the world is watching a vital shipping lane that could determine the price of fuel at your pump and the pace of economic recovery worldwide. Israel has launched new airstrikes targeting military sites inside Iran, and for the first time in this escalation, expanded operations to strike Hezbollah positions in Lebanon. Iran has responded with volleys of missiles and drones, aimed not only at Israel, but at Gulf capitals and even a British air base in Cyprus. US President Donald Trump has signaled this coordinated military campaign could last up to 4 weeks, and the economic consequences are unfolding in real time. Let's talk numbers because they matter to you. Brent crude, the global oil benchmark, jumped more than 8% today. It briefly topped $82 a barrel. US crude climbed 7.5%, settling above $72. Why does this matter? Because higher oil prices raise costs for shipping, manufacturing, and yes, your commute. They can reignite inflation just as central banks were hoping to declare victory. Gold, the classic safe haven, rose above $5,300 an ounce. The US dollar strengthened as investors fled risk. And stock markets? They fell hard, but not every sector lost. Energy stocks surged, up 4% in Europe, hitting record highs. When oil rises, energy companies often benefit, even as the broader economy feels the strain. Now, the critical flashpoint, the Strait of Hormuz. This narrow waterway carries about 1/5 of the world's seaborne oil. 20% of global liquefied natural gas also passes through here. It is not blocked, not yet, but marine tracking data shows tankers piling up on both sides. Some captains are waiting. Others say they can't get war risk insurance to make the voyage. If this choke point were disrupted, the impact would be immediate and severe. Asterisk, historically, markets have mostly shrugged off isolated conflicts in the Middle East. Only when conflicts have the potential to draw in the entire region do markets really move. Right now, investors are asking, how long will this last? And will other nations be pulled in? Asterisk, that's the question on every trader's mind. A short spike in oil? Markets can absorb that, but a prolonged disruption that acts like a tax on businesses and households could slow growth, could force central banks to rethink interest rate cuts. And remember, OPEC Plus just agreed to a modest output increase, about 200,000 barrels a day starting in April.